Paul Atkinson, the S&P hit a new high this week. You say the rally over the past year is a lower quality rally. Can you explain what you mean by that?
In companies of lower profitability, higher operating leverage, higher debt, much shorter trading histories over the past 12 months have tended to do quite well. They're sort of more momentum-y stocks. That's the last couple of weeks that's slowed down, which is probably actually a good sign for the long term.
Well, we're going to start hearing from companies their first quarter results over the next few weeks. What are your expectations?
Expectations, the obvious one would be that weather will really affect the numbers. Expectations have come down ahead of that. I think certainly from our point of view at Aberdeen, we're very much looking for what companies are saying about long-term guidance, whether they can find organic growth. We certainly believe in the operating story. Profitability still good. We'd love to see some organic revenue put on that, and that will certainly lay the foundations for potentially some earnings surprises later on in the year.
Is there a sector you like the best heading into earnings season?
I think sector-wise, we're very closely looking at financials, any sign that loan growth is coming through. Small businesses, medium-sized businesses have been really shy to borrow money from banks. We'd love to see clear evidence that banks are actually loaning out the money that they've got.
Along those lines, do you like large cap, small cap, mid cap, or does it matter?
I think we love the management team at Wells Fargo. It's a great franchise, a nationwide franchise, extremely well run. And of course, it's got that leverage to that small and medium sized business that we do want to see beginning to increase and maintain high levels of loan growth.
If there was something that's going to take you off your prediction, so for example, the Ukraine, which we saw a stock market dip after that crisis, we've come back since then, what would it be?
I think this year is very much one for focus on earnings. We need to see a decent earnings growth this year. Last year's rally was very much a revaluation-led rally. Earnings was a little bit shy. This year, it would be good to see low double-digit type of earnings growth. At Aberdeen, we're sort of mid-single digit, but we see room for surprise there. Were it to fall below mid-single digit, clearly with valuations a little bit stretched compared to last year, that could be certainly the trigger for from disappointment and some downward pressure on prices.
All right, thanks a lot. And thank you for watching The Street.